Thank you for joining us for this Forex Preview here at XM.com. We'll be looking at the Bank of Canada policy meeting coming up on Wednesday. I'm Cristina Marujos. Joining me today is Cristina Barthenido, investment analyst. Now, the Bank of Canada shifted to a more dovish stance in October, saying that it has room to move interest rates lower, just to say later on that monetary conditions are appropriate at this moment. So what do you think we'll see at the Bank of Canada meeting tomorrow?
Indeed, Christina, a few months ago, the Central Bank of Canada signaled that a rate reduction by the end of the year could be possible given its worries around the trade war and its negative impact on the Canadian economy, which strongly depends on exports. Of course, trade uncertainty remains large as neither the US or China have really convinced markets that a Phase 1 trade deal could be signed before December 15th, when new US tariffs are likely to come in effect. However, last week's GDP growth readings out of Canada surprisingly showed strength in household spending, business investment, and residential construction also contributed positively, indicating that the Canadian economy is still relatively resilient to offset any weakness, and therefore there is no immediate call right now for a rate reduction, especially as inflation also holds near the central bank's target. So this week we don't expect any move from the Bank of Canada, but still policymakers could still leave the case open for a rate reduction in January, and as long as the trade war continues to weigh significantly on business investment and generally on global markets.
Now, let's turn to the loonie a little bit, because it has been pretty steady against the US dollar over the past few weeks. Do you think the Bank of Canada could give some direction to the currency?
Well, markets have already fully priced in that the Bank of Canada may not take any action this week. However, volatility in the loonie could come from what policymakers believe about future interest rates. So if the bank delivers a more cautious message about the state of the economy that markets expect and signals that a rate reduction in January cannot be ruled out, then we may see more selling in the loonie. Employment data on Friday could provide more evidence to this after a negative employment growth back in October, while we would also be very interested to see what the outcome of the open meeting with Russia will be on Friday, as oil producers are thinking to extend production cuts after the March deadline, or even deliver deeper production cuts, something that could increase oil prices and therefore be positive for the loonie, which given the country's strong reliance on commodity prices.
I see. Cristina, thank you for joining me today, and thank you for watching this Forex Preview here at XM.com.